Okay, up next, Cartier Resources, explorer developer focusing on its past producing Chimo project, which has a PEA and over 1.5 million ounces of gold in the indicated category. They have about 350 million shares outstanding, market cap of about 35 million. Trade under the TSX.V, venture under the symbol ECR, and Frankfurt under 6CA. I'd like to welcome President and CEO Phillipe Cloutier.
Thanks. So this flips it forward. Can you hear me, everybody? Okay. Thank you very much. I'm here again. I will not dwell too much on the details of the PEA because I've presented that in the past. I will try to focus on what I believe is a game changer that we've only discovered this year, and the results of the drilling will attest to that. On the first slide, you're actually looking at a view southeast of the past producing Chimo mine. So there's its merit. It produced 3 times, once in the 60s, once in the 80s, and it ceased production in 1997 when the price of gold was $400 Canadian, and now it's the price of gold is $3,800 Canadian. And essentially, you're looking at what we were condemned to explore from 2016 to 2022. And I'll get to that being the game changer. Let's observe a moment of silence. Okay, so before diving into the flagship, which is Chimo Mine, we have 3 other properties that I think it's worth to mention: Fenton, Benoit, and Wilson. Benoit has a 43-101 estimate. Fenton and Wilson have very high-grade, smallish deposits that poke up at surface. And the reason I mention them is that there was a recent major transaction when Gold Fields bought the Windfall deposit. And so I think we're strategically located. But more importantly, let's get down to Chimo. We're located on the Larder Lake Cadillac Fault. We've produced 4 resource estimates, a PEA. We've drilled over 100,000 meters in the last 10 years. And I'll show you some of the results this year. But what's next? What's next? I won't steal the punchline. You'll have to wait till the 14th minute. And this basically paints the point I want to make about the game changer. We bought the project from a bankruptcy sale in 2013. We paid $260,000, less than the price of a house in Val-d'Or. We then attracted Agnico Eagle to take a 19% stake in us. And then we had a honeymoon. We raised a lot of money, and we drilled 4 distinct diamond drill programs, delivered 2 resource estimates, and we were basically landlocked in between 2 property boundaries, as you'll see. And that's when we decided to acquire the east and west extensions, and we dealt with O3 Mining. We actually initiated the deal here at the fall 2021 Dutch Goldmesse. And then we delivered the PEA. And as you'll see, that's where we discovered the game changer. Because by taking out the property boundaries between Chimo and East Cadillac, we also discovered that there's 12 different property owners over a 60-year period that made a number of discoveries east and west. And by taking out the Chimo and East Cadillac boundaries, we took out all the internal boundaries. And all of these historic discoveries were free to be drilled in every direction. So I'd like to remind the people that the project is situated east of the Val-d'Or mining camp on the Larder Lake Cadillac Fault. And you can see it's a sizable position. It basically covers the area from Val-d'Or to Malartic. Those are the resource numbers. I'd like to remind you we did the PEA using a price of gold of $1,750 US. And the obvious advantages for this company and this project is we're situated a 30-minute drive from downtown Val-d'Or. So infrastructure and qualified workforce is a definite benefit. I'm going to focus now on just the property. So let's dive into it. There's the property scale. All those red dots are 800 diamond drill holes that were drilled over a 60-year period. The magenta boundary is that smallish property that we had until 2022, and it was obvious that we had to acquire the surrounding ground to tap into those historic discoveries. We now call collectively the Chimo mine property and the East Cadillac properties the Cadillac project. All right, so the next slide, you're actually going to see a slide through that group of red dots looking north-northeast, and you'll see what I mean. So there you have it. On the top part of the slide, you have a bird's eye view of all those discoveries along the Cadillac Fault, and you'll see that it's not just one line, it's a corridor that's about 800 meters to a kilometer wide. And on the bottom part of the slide, you'll see a vertical slice through the Chimo mine property. And you see those two vertical boundaries, the black stippled lines there. That's all we had to work with until 2022. And so now we're exploring east and west. And we did additional drilling that was not included in the PA, and obviously in resource assessment shown in black here. I'm just going to go over this slide really rapidly. From a PEA perspective, what you have to look at here is the all-in sustaining cost was extremely low because we already have a shaft that goes down to 920. If we had to redo that shaft today, it would be in the order of $150 million. The next thing I want you to see is we have a comfortable production profile of above 100,000 ounces of gold per year and a 10-year mine life. So basically, we're sitting pretty. And we have room to move to grow this east and west, as you'll see. This slide basically shows the mine design, the current mine design, and as I've shown you on the previous slides, well, it's open to the east and to the west, and obviously at depth, which junior companies want to avoid to do because of the cost of drilling. Here's another game changer. We did the PEA with a base case gold price of $1,750, and then on the PEA press release, we scaled it from $1,300 gold to $2,200 gold. We just wanted to see how that would vary the NPV and the internal rate of return. We never even imagined that the price of gold would go hit $2,750. So you can see that already at $2,200 gold, the NPV is double, and the IRR is about 30%. So this project can continue to grow through exploration and geological attributes, but it can also grow from a value perspective on using different gold price assumptions. Very recently, we announced a slew of drill results. We initiated a diamond drill program in January 2024, initially 28,000 meters, about 150 or 160 drill holes. We're going to be finishing the program in about 1 to 2 weeks' time, and we'll have completed 29,000 meters and 164 diamond drill holes. And to our surprise, basically, like I said, the game changer was east and west of that Chimo mine block, there was about a historic 10 to 12 different companies and operators, and therefore 10 to 12 different, gold mineralized areas. And by getting rid of all these property boundaries, it opened up the type of targeting that we could do. And as you can see on this map, we've discovered 8 new zones, or 5 new zones over an 8-kilometer distance. And just yesterday, we announced 241 grams per ton gold over 0.6 meters, and that's included in an ounce per ton over 4.4. The significance of that intersection is that it was intersected 200 meters north of the portal zone that we had disclosed 2 weeks previous to that, and that sits just north of a ramp, an exploration ramp, that was driven in 1987 to 1988 towards the mine, but then aborted for some reason. The market fell. So we're quite happy with the results that we're getting. High grades, and in some instances, like at North Contact, we're getting 20-meter widths. So we've totally redesigned the map and the geology of the area, and 2025 looks extremely bright. So there's basically going to be, we've gone from a discovery drilling program to a multiplier program, And I might as well show you that on an idealized calendar later on. But essentially what you have to remember from this project is we've delivered a positive preliminary economic assessment report on the Chimo mine project. And we have multiple opportunities to make this even better, owing to the gold price, owing to the fact that we have drilled, some additional resources that we have not included in a fifth resource assessment and an updated PEA. Since it's an underground gold mine in a very weak energy priced Quebec, it's a carbon-friendly gold project, and we could also use ore sorting technology to enhance the grades at the property. And then also there's clear potential to increase the resource near the infrastructure. I just walked you through the fact that by acquiring O3, we've added a significant amount of land position, and we know for sure where the fault is over a 15-kilometer distance. We've drilled only 10 kilometers of that this year, and I think I've shown you that our gold discoveries this year attest to that, confirming that potential. But one of the values that goes unnoticed really is the fact that we're in a mining-friendly jurisdiction, close to infrastructure and qualified workforce. And those are two elements that, compared to remote projects, ensure that if you get your project off the ground, you're not going to get surprise inflationary cost built into your build. So there we have it. If I would paint an ideal 2025, I would do 100,000 meters on the Cadillac project. We have the targets, we have the ground, and we have the knowledge based from the past 10 years of drilling on the Chimo mine area, where we know clear geological structure, geochemical, and mineralization vectors. So we're not prospecting with the drill. So we've gone from a 10-year period where we're condemned to drilling just a very small strike length and drilling 100,000 meters over a 10-year period, to now being able to drill a 100,000 meter program over a much wider area in just 1 year. We'd have 2 or 3 drills expanding on the discoveries of this year, and another 2 or 3 drills expanding exploration along strike, and locally sometimes at depth. And obviously, we could reserve some of the drilling for, teasing the new district with Fenton and Wilson. And obviously, in parallel to that, well, the project having been presented to a wider audience of corporates, as you may suspect, since publication of the PEA, well, there are alternative ways to tackle this and move the project forward. I'll leave you on 2 slides. We have significant ownership by Agnico Eagle and O3 Mining, the Quebec Sovereign Funds management and board. That 66% part of the pie chart, well, there's about a 10% ownership that's from sophisticated high net worth European investors, and we aim to grow that. We also aim to grow our ownership through portfolio managers, specialty portfolio managers, because we think our project is now at that level. And finally, perhaps secure some cornerstone investors to help us get this thing even further. We recently traded up to 13 cents. It is quite frustrating to see us continue to deliver really nice results and stagnate at about a 10-cent level. But suffice to say, we have the asset, we have the property, we're in a great jurisdiction, so I think we're going into a better future. And I'll leave you on this. Again, that's a sample that was taken underground at the Chimo mine, and it was given to us by the then mine geologist. So there are spectacular grades at Chimo. There are 2 mineralized systems, one that's extremely high grade that is telescoped within a much brighter, lower grade system. And so there's optionality here for targeting and moving forward. Anyone here want to contact me with questions, you have the numbers and my email up on screen. You could also come to booth number 5 while I'm here for the next 2 days, and I'd be very happy to answer any or all the questions that you may have. Thank you very much.
We've got time for one quick question if there's any out there. Over here.
So you've done 3 to 4 progressively increasing MREs on the lands you were constrained to. You have new acquisitions to east and west. Are you going to do MREs for both of those, or is Bill going to be roped into another one?
That's a very good question. Obviously, with the way this program has delivered, we understand that any other program that we would do, by the time we would get this upgraded MRE out, it would already be stale dated. And that's the first part of the answer. And the second part of the answer, I have just seen recently competitors of mine put out some really nice MREs or some really nice PEAs, only to be met by market drops. Like it's really quite frustrating. So I think success is bred through the drill bit. I think the senior mining companies like to see us grow projects and scope out the potential. Best way to answer your question is an MRE can go from anywhere from $250,000 to $350,000. We're clocking in at about $125 per meter. So you're asking me to sacrifice 19 150-meter drill holes for a technical report that's probably going to drop our stock. I hope that answers your question.
Got to stop you there.
Yeah, thanks.